Hello and welcome to From the Helm live here on the Gold Coast for the Resources Rising Stars 21st Anniversary Conference here. I'm so excited to be here. My name is Grady, Wulff, Market Analyst with Bell Direct. And today we're talking to all different executives about what the outlook is for FY25, the commodities of the minute and what we can expect over the next year. Next up, I have Nic Earner, the Managing Director of Alkane Resources. And you're in the hot commodities of the minute, copper and gold. You're from Perth, headquartered in Perth, but your operations are on the East Coast. Talk to me about that.
Yeah, so a little bit about Alkane. Yes, our headquarters is in Perth, but our operations, Tomingley Gold Mine, halfway between Dubbo and Parkes, in that sort of premier bit of New South Wales for metalliferous.
Yeah.
And we've been operating that mine since 2014, and then the copper part of our business comes this large exploration prospect we have called Boda Kaiser, which is to the east of Wellington. So yeah, all there in the central western New South Wales.
Now, gold has been on a tear in recent months, and we know it's at record highs right now. What's your outlook for the commodity of the next 12 months, and how high can the price really go in your opinion?
Oh yeah, very interesting question. I think every single person, a lot of the investors watching, will be thinking to themselves, you know, what's the US election going to look like? What are interest rates going to look like? How much money a government's going to print? You know, so that gold, of course, being a real, tangible, monetary equivalent.
Yeah.
I think for me, I take a look at the forward curves, right? So that's where the majority of the market money is. And so if you look at forward curves at the moment, you know, you could sell gold today. You could sell a forward 5 years out with sort of $4,400-$4,500 Australian in it, right? So to me, it feels like we're continuing to have upward pressure because the financial instruments and derivatives are saying upward pressure. So I certainly think it could, blow through 4,000 Aussie, but who knows? As producers, our job, of course, is get costs as low as possible.
Absolutely. We like the margins. Margin appreciation is what we like to see. Speaking of that, you just released FY24 results recently, including the maintenance of profitability. That's massive for a miner. Can you tell us about the highlights for FY24 results for you?
Yeah, our highlights for FY24 were particularly sort of managing our way through at Tomingley as we transitioned to a new underground mine. So people familiar with the Alkane story, or those that aren't, we've been operating an underground mine for many years, and we got approval to extend that to the south off the New South Wales government at the start of 2023. And we've been doing that. So we brought that mine into production in early 2024, started stoping. And so, the financial year was really marked with capital spending and intensity of that. So being able to maintain that headline profit, realizing, of course, that's accounting terms of that, because a lot of what we did was capital investment. So our cash balance went down because we're investing in this future of the mine, extending the mine life and increasing production. But yeah, it was a tough year. It's always tough to produce money and spend capital wisely. So yeah, we're very pleased with the result.
Did a very good result. Now, copper is the other asset that you are, obviously, you boast in your exploration efforts. Tell us about which of your projects is the most advanced in the copper space.
By far and away, it's our Boda Kaiser. It's a porphyry deposit. People will be familiar with the likes of Cadia as a mine. So this exploration deposit, we have both indicated and inferred over 15 million ounces equivalent. So that's 8 million odd ounces of gold and 1.5 million tonnes of copper in it. It's lower grade, so if it was all as gold, it'd be 0.55 grams a tonne, so quite low compared to a lot of the other people that investors are used to talking and hearing about. But these mines, they're mined at that grade all through the Americas. Right?
Okay.
And so we put out our scoping study for that, which showed how it might make value. And so we're now looking at the approvals process for that. And as well as that, I'm talking to, I'm heading to the US after this. I'm talking to large major companies about who might want to invest and how, future partnerships and other things might look like. So that's the path forward for that project.
Now, mining in central New South Wales is quite different to mining in WA. We know WA is a hotspot. Tell us about the key differences and what you've noticed in your times mining in both, obviously.
Yeah, in both jurisdictions. Well, I think number one is the mines in New South Wales are further distributed, and the trucking of ore between locations, so central processing hubs, is much less of a thing in New South Wales.
Oh, wow.
Part of that is just because New South Wales is more heavily populated. So it's freehold land and more heavily populated. So the road use of heavy haul trucks, unless you get quite out west, out sort of people trucking into the Cobar region, it's not done. So that restricts the type of investments that people do. The other thing is that because it is freehold land compared to Crown land in WA, there's sort of two different effects. One is that native title and the issues surrounding that are simpler in New South Wales. The other thing is that because it's all freehold land, like for instance, when we developed Tomingley, we bought 7 different farms underneath it, right? Whereas you would have dealt with just one leaseholder in WA. So that's another complexity. The other thing is that the geological nature of it, the transported cover, makes exploration a little difficult. And then the final thing that most people are aware of is, of course, the environmental approvals process takes longer in New South Wales. So there's sort of wins and losses. Last thing I'd say is our mine and many other mines like it, we're residential. So we don't have fly in, fly out.
Oh, yeah.
And so there are less costs associated with that and more stability for employees. So I think, a lot of people work in New South Wales mines because they no longer wish to do fly in, fly out work.
Now, what is the outlook for Alkane over the next 12 months?
I think it's pretty exciting. So if we look in the next 12 months, we finish delivering our capital program and we ramp up our production. So that's really good. And then we go out seeking capital partners for Bodo Kaiser, which is also good. But I think people that look at us will look at our market capitalisation compared to some of our peers and think, that's worth a second look on value.
Yeah.
And so, it could be quite an interesting 12 months, hopefully.
Nic Earner from Alkane Resources, thank you for your time today, and I hope
Grady.
you enjoyed that episode of From the Helm. If you did, why not subscribe to the Resources Rising Stars and Bell Direct YouTube channels.